You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Thursday, July 20th. We've got a bit of an abbreviated show coming to you today as we're going to do some housekeeping items and we're going to go over the portfolio performance to show how our stocks are doing. Just a quick overview. We do it periodically just to let you know how our performance is so you can track it. First, the housekeeping items. This is going to be the last live broadcast of the show. I'm going to continue uploading videos, but it won't be on the set schedule that we do live. Usually I record all my video segments live so I can chat with people as I'm putting the segments together. Because of some projects that we're working on, I'm not going to be able to do the live show at the same time every day, but we are going to continue with periodic posts, try for some daily updates with news stories and things, and I'll be a little bit more flexible so I can get some breaking things out there and put together some different stories as they come up throughout the day. So I can have some more flexibility. This will be the last live broadcast. Now, let's take a look at how our portfolio is performing to date. Bring it up over on the screen here. Right now, it's up 5.3%, which it's been lower. It's been a lot better. So let's go over the stocks that we have in it, how they've performed, so we can take a look at each of them. GameStop, we like GameStop stock. We're not expecting much this year out of it, but it has almost a 7% dividend yield, so it being 5%, down 5%, doesn't really concern me all that much. We're collecting the dividend on that as they have the turnaround play. Cheap forward earnings, but it's a retail stock, so it's in the dumps. Big dividend. What it comes down to with the GameStop is, do you believe they'll be able to turn the stores around with their collectibles? We do, so we like GameStop. Apple, it's a no-brainer to own. Great company, up almost 9% for us. Nintendo, we love Nintendo stock. It's up 62%. We think that it's still going to go higher. A couple of dogs that we've got now in our portfolio. AT&T has underperformed pretty much since we've owned it, as this deal with Time Warner keeps lagging on. Now, I'm looking at this as just a buying opportunity. We like AT&T's dividend that they pay and how they're kind of getting about with their original content, trying to scoop up HBO. Disney has underperformed for us somewhat. At first, when we got it, was up a couple of percentage points. There's lots of concerns over ESPN, but I think it's a great company to own, pays a decent dividend, and their movie portfolio, they have so many chances at these billion-dollar hits in the pipeline. It's more than making up for ESPN. Activision has done extremely well for us. Activision is right up there with Nintendo, I feel. They actually do some things better than Nintendo with some of the IPs that they have with monetizing in-game content. So we really like Activision. Their earnings will be coming up here. Hopefully they dip down. Every time we see the earnings come up, we hope for a dip to be able to buy some more. They had been dipped down about 4%, 5%, and we missed the opportunity. So maybe they'll get a pullback. We like Activision stock. WWE stock had been lagging quite a bit. It's recently been running up on some of the deals that WWE's made. We believe this is a monopoly, and it is a alternate play to Netflix, as Netflix has, they've become where they're trading at hundreds times their earnings. WWE has their own unique network and content that they provide for people, and they're really pioneering that and will become a global presence here. So we like their stock with their dividend. Some of the viewers had recently picked up some shares of that, they said, not too long ago. So it's had a pretty decent run since they picked it up. So glad to hear that. Qualcomm, of all the stocks on this list, this is the only one I've been tempted to and am still tempted to sell. This stock, we liked it because of some of the things they were doing with servers with Microsoft, and some of their business, their targets for India and things like that. That they're going to be making some real cheap products to get into those in those areas, and it pays a good dividend. Now, they had this lawsuit that's ongoing with Apple, and um, the CEO assured everyone that that was all baked into the price, and that was a couple of quarters ago, and it turns out it really wasn't, and they've been slipping since then, and there's ongoing dispute with Apple, and it keeps it keeps going on and on and on. There's no resolution, and clearly it wasn't baked into the price because they've had to revise earnings and different things. So, not happy with Qualcomm. Now, the only reason why I'm not selling the stock and why I'm keeping it, normally that type of thing, if a CEO says one thing, it's just so blatantly out the door. That's bad news to me. But the reason why I'm not selling them is because there is a possibility that they will reach an agreement. There will be a payout, and Apple is not showing the extra profits from this. They're accruing it, so that leads me to believe that Apple will come to a settlement with them. And they've already had some rumblings of a settlement, so that is the only reason why I'm not selling them. But they're still a little bit in the doghouse. Collectors Universe. Another stock we love, very small cap stock, pays a 5% dividend. They've been bouncing up and down 2%, and they do have some pretty big swings, primarily due to the volume. They don't have a lot of volume when they trading during the day, so volume will move them pretty easily. It's not unheard of to see them do 3% swings. It's a nice stock to trade on the dips, certainly. Seagate, we actually bought some more of Seagate as it went down to averaged out a little. They were closer to 8-9%. They were down. Western Digital is probably the better play, but we believe that either stock long term in the future, with the amount of data that's being used, is going to be an extremely good play. They had the better dividend. We went with Seagate. Our last few picks have all been doing extremely well, ones that we've picked up. Coca-Cola is doing well. We like Coca-Cola. We picked them over Pepsi. I just prefer drinking Coke, to be honest with you. In a lot of ways, Pepsi's been doing much better as a company. They're both solid companies, but my preference is Coke. Hasbro, we like this as a play in the resurgent tabletop games that are out there, and a lot of the digital stuff they're doing, and the properties that they have. No one can really touch them. So Hasbro's been on fire. It's a great pick. Glad we picked them up. Square Enix, Comic-Con's going on today. Square Enix is out there. I want to hear some more on Project Octopath Traveler. They have a lot of unique games. They're the only company that's come close, really, to the popularity of some of Activision's MMO stuff. Like to see a little bit from Square Enix. I think they're going to be one of the developers that's going to benefit the most from the Nintendo Switch with their support of it. So hopefully more things to come on them. I really think this one's going to take off. It was upwards of 9% up. It settled back down to 5%. Sega is kind of one of our long shot plays. It's been up a little. It's been down a little. Very inexpensive stock, and they are making a huge push back into gaming. So look for them. Probably bought it a little early. As things materialize with Sonic and stuff with their support with the Switch, I think you could see Sega take off. So take a look at that stock. McDonald's was our food pick stock that we had. Texas Roadhouse is another good one, but we went with McDonald's because of their delivery and apps that they're going to be putting out there. We'll see if they can keep growing there. And Foot Locker was just such a value play in a retail space where you're going to want to try shoes on. Amazon's not going to be the end-all be-all with shoes. Small enough footprint in retail. Fundamentals are good. Pay a huge dividend. So overall, we're up, 5.3%. Been better. certainly been a little bit worse, but we want to see that almost double as the year goes on here. Now, our dividend payout is almost $115 a year, which is 3% dividend return. So, pretty good there as we grow that. We want to grow that. This is ultimately a portfolio that is our kids' college fund, and we're building it monthly with stock purchases, and that's kind of the basis for the show, and to get people who are in gaming and entertainment and YouTube and stuff like that into investing. So that's where our portfolio stands, and I'm going to wrap it up for today. Again, this is going to be our last live show that we do. We're going to continue to post videos. We're back posting them Monday. Splatoon 2 is coming out tomorrow, so I'll be a little busy with that. So appreciate everyone who watched live and chat with us live. I enjoyed it. Continue chatting and putting comments in the YouTube videos as you see them pop up. So be sure to subscribe to the channel if you haven't already, because we're going to be posting videos all sporadically, and it won't be at the set live schedule that we had now. So subscribe if you want to get the latest investing news for gamers. Leave us a feedback. Give us a thumbs up if you enjoyed it. And thanks for watching. You should see some recap videos posting back up Monday.